Hello guys, this is David Capable in the building. We have been turning out videos about different strategies we can use to trade the forex market. And today I'm here with another strategy. So I would want you to listen to me very carefully in this video as I vividly explain how traders retrospectively look at specific scenarios or markets movements, activities of the price action to determine if they are going to exit the market or they are going to enter the market. Now, this topic we have before us is none other than the pin bar candlestick. The pin bar candlestick is actually known to be used by expert traders to trade the forex market and is a very powerful tool. Therefore, I want us to look at that particular tool today. All right. Remember that the forex market speaks the language of candlestick, and that candlestick language is actually interpreted in price actions. So, if you want to understand forex, understand candlestick language. The candlestick language is the language of the forex. The interpretation is actually done in what? In price action. A video on price action has already been released. So let's go straight to what pin bar candlestick is all about. What is a pin bar candlestick? A pin bar candlestick is a type of candlestick that signals a rejection of price. It consists of a long shadow, a small shadow, and a body between them. Now, if you have read this definition, then you need to see how this pin bar looks like. First, you need to understand the pin bar is a rejection candle, a candle that rejects price at a particular level. Whether the price is going up, all of a sudden the pin bar appears, there's going to be a change or there's going to be a continuation, whichever way. It's just a price rejection. All right. So look at how the pin bar looks like pictorially, because it's very important you look at how the pin bar is. The pin bar has what? A bullish pin bar, and it has a bearish pin bar. Now, the characteristics of these pin bars is just slight difference. One has a body up, which is a bullish one, which is the one in green. The body, as you can see, the body has an opening price down at the beneath of the body and closes at the top of the body. Then there's a small shadow. That small shadow is called the wick, or we call it the nose. All right. And you look down, you see a long tail. That's a long wick. That's a rejection area where there's a rejection. Opposite to that particular bullish pin bar is actually the bearish pin bar. You can see it's just the opposite of that. The same long wick, but the long wick is facing up. Then we have the nose down. Then we have closing. The closing of the body is at the bottom here. The bottom of the body. You can see closing price here. Then the opening is there. Unlike the other one where it has the opening here and closes here. So with that, you have now seen how a pin bar looks like. Either the pin bar is either going to be bearish or it's going to be bullish. But this actually pin bar comes in different forms. It comes in different shape. It may not come exactly the way it is here. So look at how it looks like. It comes in different shape. Look at how it looks like. You can see. This is a pin bar. You can see this kind of pin bar does not even have real body. Okay, look at this one does not have real body. Okay, there could be bullish or bearish, whatever. Look at it, how it is. You already know how bullish it pin bar is and how bearish look like. So you can see, whenever you see this pin bar, just know there is a rejection of a price at that particular level. That is just the interpretation of that particular candlestick. All right, just the interpretation. So let's go further. Before you start trading this particular pin bar, please, you need to be beware of some certain things as a trader. And those things are called caution. So I want to caution you on trading the pin bar. The first caution you need to take note is, do not assume the market will reverse because of a pin bar. Take that outside your mind. Do not ever assume that whenever there is a pin bar, the market is going to reverse. Please take that out of your mind. Do not give too much attention to pin bar. If you give too much attention to pin bar, you may not end up actually taking advantage of other opportunities in the market. Okay, even though this pin bar is a holy grail, it comes with good positive possibilities. It does not mean that you should focus too much on it, that you forget to take advantage of other things. Just be moderate in using it. All right, then treat all pin bars equally. Please treat all pin bars equally, no matter the shape and all that. Treat them very equally. They are very, very important. Now, how do you now trade this pin bar? How do you use this pin bar strategy actually to trade in the market so that you can make massive profit? Because this pin bar, honestly, is a holy grail. It's a holy grail. It's a very powerful technique that experts, big traders use. And if you want to use it, you need to understand how to use it in 3 forms. There are 3 forms this pin bar is actually used. I'm going to expose and unleash it to you right now. So please, just follow me carefully. Now, if you want to increase your winning rates, your odds of winning in forex trading using the pin bar strategy, you must use it in these 3 forms. First, trading with the trend. Use it to trade with the trend. Use it trading from area of value. Okay? Or you use it by waiting for a break of structure. You wait for a break of structure, then you come to a lower time frame and enter it. Okay? I'm going to explain each of these particular 3 powerful way you can use the pin bar to trade in this, using this particular winning rate. Okay, there are 3 winning rates you need to take advantage of if you want to make use of pin bar to actually maximize your profit. So let's start with the trend. Okay, now how do we trade pin bar in a trending market? There is a video that talks about market structure. Okay, please go and watch it. We have different types of market structure. Now, in a trending market, when we say the market is trending, meaning the market is actually bullish, and the market is going up, is buying, going up, or the market is bearish, the market is coming down. Now, when you see pin bar in a trending market, please do not assume it's going to reverse. Do not assume. It could signify a continuation of that particular trend. Yes, that pin bar could signify a continuation of that particular trend. But how do you now trade it practically is what I just itemized here. First, you have to find the time frame you want to trade this pin bar. Are you going on a 15 minutes time frame, a 30 minutes time frame? But the best of all is actually the bigger time frame, which is D1 and H4. Okay, these are bigger time frame. This is the best to actually trade pin bar. Then, if you are focusing on any of this time frame, what are the technical setup you are going to look at? If you are trying to look at the pin bar at these time frames, first, the technical setup at that place is first try to understand the trend of the market by drawing a trend line to know if the market is actually a bullish trend, whether it's going up, or the market is going down, is bearish. Okay, try to understand that. So there's a video on trend line, how to draw trend line, how to spot trend. There's a video on that. I've already shot a video on that. Go and watch that video too. Now, once you come to a lower time frame or a bigger time frame, that whatever you choose, try in any of the time frame, choose your what? Choose where you want to look at. If I'm looking at D1, I know it's uptrend. I'll be looking at the pin bar that forms in that uptrend. Okay, so if you are going on the lower or higher time, whichever, first thing, technically, after spotting your trend line, you have drawn your trend line, watch out for this. Watch out for pin bar formation. If the formation is actually a bullish pin bar or a bearish pin bar, watch out for that. So now, if it's an uptrend, first, if it's a bearish trend and you see a bearish pin bar, please do not assume that the market is going to what? Reverse. The market is going to continue. That's why they said bearish pin bar is sell. You have to sell, because what? The market is going to continue the trend. It's going to continue the trend. Then if it's a bullish pin bar in an uptrend, what does that tell you? The market is going to continue what? That particular trend. Okay? Very, very important. Okay? Very, very important. So most times you may even see the opposite. Maybe the trend is upward and you see a bearish pin bar. It does not mean this thing is going to change the trend. No, it is still going to continue, except on one note, which we are going to look at, which is the next one. If there is going to be a reversal, and reversal usually occur at some points, which I'm going to explain in the next video. But for now, understand that when it's a trend and you are following a pin bar, you should allow your pin bar to show you the trend. So do not go and enter at the wrong place. When you see a pin bar, please do not say it is going to reverse. It means it's going to continue, because it follows trend. The trend on the market is very important. It's the price action. Okay. Now look at this example. The market was actually trendy. Okay. This is Great Britain pounds against CAD. The market was trendy, was going up. Then suddenly a pin bar appeared. Look at what I wrote here. Technically, a pin bar. Yes, we are expecting the price to actually what? Come down, right? No. But it's against the trend. So this pin bar is actually against the trend. Because it's against the trend is always going to supersede it. It just only come down a bit and continues. If it did reverse, it just came back a bit and continues, because the trend is a price action. It controls irrespective of the price pattern. It's the price action that matters. Okay? So the pin bar that came here shows that the market was supposed to start coming down. But no, trend takes over. It continues. It keeps going up, keep going up, keep going up. You can see. Until when it got to this place. It got to a point. And that point is what I'm going to be explaining in the next video. How you can actually know that, okay, at this particular point, this pin bar is going to reverse. Because in this case, it's not going to reverse, it's following trend until it got to a particular area where it's going to reverse. And that area has a name. And that is where our next headline talks about. And the next headline I'll be talking about is trading at area of value. Okay? The pin bar only reverses at areas of value. The area of value are the place where you marked your support and resistance. So if you marked your support and resistance in any of this time frame, whether M15, M30, or D1 or H4, which is actually the best, the higher time frame, you mark it. What do you do? If the market is going up, is on an uptrend, and it got to a point of resistance, which is a very important key zone, which is actually also a zone of what we call it, the zone of value. That zone, that area of value, got to that point, is the resistance level, and you see a pin bar. What does that tell you? The market is going to reverse. Automatically, the market will start coming down. Very important, because that area shows that the buyers have already been rejected already. Because when the pin bar appear at that point, suddenly market will start coming down. They say you can start selling. Means buyer have been rejected, sellers are taking over the markets. Okay, but if the market is a downtrend, and it comes to a area of value, which is a support zone, and you see a pin bar there, what does that tell you? It means that sellers are being rejected. Now buyers are taking over the market. It's going to start buying from that support level, which is a very valuable area where the pin bar appears. So when you are trading the pin bar, you can trade it actually at these areas of value, whether the support and resistance zone. Look at how it looks like in the picture. Look at, in this case, this is the case of Euro versus USD in an M15, I mean to say, time frame. Okay, the area of value has been marked already. This is area of value here, where you have that buy order. Yes, that is like this, the support zone. So when the market was coming down, it came to this place, then it now formed a bullish pin bar. Now for a bullish pin bar, you see they put a stop loss. The stop loss is actually put at the wick end, the longer wick. So you put the stop loss at the longer wick area. Then what happened? Expect a reverse. The market automatically start reversing, because it's actually the pin bar appear at an area of value, and it's a bullish pin bar. The market will start going up. Look at how it start going up. Sorry. Look at how it start going up like that. Okay, that's it. Then on the other hand, too, the same example, but different case, where it appears at the resistance level. Look at when it got to the point of resistance. You can see where it has been drawn. Suddenly, you saw a bearish. You can see we have marked it already. You saw a bearish pin bar appear there. I put the stop loss at that longer wick side. Then I will start entry. When I start entry, meaning the market will start dropping. Look at the market that started dropping. Did you see where it started dropping? Dropping even up to this point. So that is important. So always look at your pin bars at the areas of values. The areas of value simply means at the area of support and resistance. Okay, very, very important. Either using the M13, M15, D1, or this in D1, or what I said, D1 or H4. But bigger time frames are always better for this. Okay. Then the last one, the last points that will increase your odds of winning using the pin bar strategy is when you trade the pin bar at the break of structure. When you trade pin bar at the break of structure, it will actually increase your winning rate. Okay, it's very, very effective. Now, let's say you identify a bullish pin bar on a daily time frame D1. So on the 4 hours time frame, what you'll be looking for is a series of high highs and higher lows after the bullish pin bar forms. And when the price breaks above the resistance of these highs, that is where you'll be looking to buy. Now, I actually did a video on market structure already. You can go and watch that video. Now, when you go to a bigger time frame like D1, like this being said here, and as you are looking at the market, you saw a bullish pin bar. Okay? And there is a structure already. When there's a bullish pin bar and there is a structure, what does that tell you in this particular strategy? Come down to a lower time frame from that bigger one when you see a bullish pin bar, and you discover that thing is going to retrace back to form a lower high. Wait for it to retrace back to a lower point before you enter. Do not go and enter at that point that you are seeing a bullish pin bar. Wait, come to a lower time frame, wait for it to come down, because at the lower time frame, that thing you are seeing there, it shows retracement in a lower time frame. If you see pin bars in higher time frames, they are symbols of retracement in lower time frames. Come to a lower time frame, wait for it to retrace to a particular point before you enter. If it's a bearish pin bar, allow it to retrace downward before you can enter. Okay? You allow it to retrace upward before you can enter down. So if it's a bearish pin bar, let it retrace and go up. Okay? When it goes up on a lower time frame, then you can enter, start coming down. Then if it's a bullish pin bar you saw in a higher time frame, go to a lower time frame, allow it to retrace and come down small before you enter to continue the bullish trend. So it's very, very important. So this is just an example. Okay? It's an example here. Okay? It just shows on an example. Okay? That's actually a trend. A bullish pin bar at a higher time frame. Then he comes down, he waits for it at You wait for it at the lower time frame to retrace downward and enter at that place before it starts going up. It will continue. It's going to continue the bullish trend, but if once you just spot it, come down to the lower time frame. Wait for it to come and retreat at a point first before you enter, and it continue is the movement going up. If it's actually a bearish trend, allow it to retrace upward. When it retraces upward at the lower time, come to lower time frame. When you see it at the bigger time, come to lower time frame. Wait for it to go upward. After it goes up a bit, then you enter down, you pick it. So that is the importance of using the pin bar strategy. I've mentioned 3 ways to use the pin bar strategy. So let's have a recap to this particular video. Now, what we've learned so far, this is a recap of it. A pin bar is usually a retracement on the lower time frame. Please put at the back. Whenever you see a pin bar on a higher time frame, it means there's going to be a retracement at what? At the lower time frame. That's where you're going to, is that the retracement area you're going to enter. So if you see a bearish pin bar at a higher time frame, come to what? Come to a lower time frame. Wait for it to go up before it will come down to continue the trend going down. If it's bullish spot at the higher time frame, wait for it, go to a lower time frame and wait for it to retrace downward before you enter for it to continue this bullish run. Okay, then don't assume that the market will reverse because of a pin bar. We've said that over and over again. Okay, you cannot just say because there is a pin bar you should just reverse. No, be very cautious about that. Focus on the price action and not price pattern. I said it, that the forex market language is candlestick, but it's been interpreted what? In price action. So you should focus on the price action. What is the market saying when this pin bar appears is what matters. The price actions explain all that. Either is it telling you that the trend is going to continue? Is it telling you that it's going to be a break structure? Is it telling you that there's going to be reversed? Okay, very important. So focus on the price action and not the price pattern. Then pin bars are not created equally. I've said it. We have different shape. I gave example. We have showed you different shape in the earlier part of this video. You see different shape of it. Some don't have visible bodies. Some do. Some comes with nose. Some don't come with nose. That's a little wig at the top. They don't, or little wig at the bottom. They don't come. Some don't come with that at all. So it's very, very important. Okay. So pin bars are not created equally. Said that you can increase your win rate by trading with either the trend, which I've explained how you can trade and the pin bar using the trend, or trading from an area of value. That's mean you are trading the pin bar using the area of value. That is support and resistance trading formula. Some people only trade support and resistance, so they look out for pin bars. Some people they only trade using trend, so they look out for trends only and focus on that. So they look out for pin bars too. Some people, their own strategy is that they look at break of structure. So if you are the one that falls under the last one, you fall under break of structure, you should spot your pin bar at a higher time frame. Then you come to a lower time frame where it will retrace before you enter. Okay. Then lastly, do not use only pin bar to trade. Do not use only the pin bar to trade. Always use them along with additional technical confirmations. Do not use, I repeat, do not use only the pin bar to trade. Use them along with other technical confirmations. There are different technical confirmations. Trend lines, I have a video on that. I showed that. Support and resistance, they are technical confirmation. Go and watch that video. Trade and chart patterns, go and watch that video. It's also technical confirmations. So there are different technical confirmations. Focus on like 2 to 3 or 4 technical confirmations in addition with this pin bar, and master it so that you can actually spot your entry zones and your exit zone. So thank you guys for listening to me very carefully on this video. It's a very powerful tool, and I advise you to listen to this video over and over. I remain your voice, David Capable. Keep supporting us as you subscribe to this particular video. Thank you.